Yeah, and look, what I'm afraid is that we're about to wind ourselves back up. You'll remember we talked when we were in the middle of the currency wars, and everybody was upset that China was devaluing and trying to kind of export their way out of any problems that they were having. You would think that when the U.S. is having high inflation, the dollar would be going down, but the dollar's going up. We're setting kind of unprecedented record levels because the world is recognizing, well, maybe the U.S. is going to try to confront this. Fed and the interest rates in the U.S. are going to confront this problem perhaps faster than is happening in the rest of the world. But I'm afraid that over the next year, if we stay on this path, we're going to wind ourselves back up into a kind of a trade war scenario where it's this quiet currency war, and other countries try to export their out of their problems and kind of send the problems onto the U.S.
Carlos, how should we be reacting? If the dollar gets too strong and we're already slowing down, then you got all the currency headwinds, and it could present problems for us in this country based on what Europe does, and obviously keep going east of there.
For sure. And as economies, emerging economies, developing economies, as they devalue, that's not a good thing for them. They may be able to export more, but imports cost more. Devaluations are typically a sign of coming inflation. So right now we're in a bit of a strange spot because of interest rates being so similar and the U.S. going up. But emerging markets are not going to fare wear heel. This is not a good story. Devaluing your currency just going to cause inflation, and it's just going to keep them in a spiral. And it's easier for them to hit a higher rate of inflation than it is for us.
Austan, who do we rely on to help with this? Just the Fed? What can the Biden administration do?
Yeah, I've been saying I don't think there's a lot they can do. And if you were kind of in the mindset that it's fiscal stimulus that caused this, the timing doesn't really work because the fiscal stimulus, as you know, is totally winding off. So everything matters is kind of the delta from last year. And last year we had a big plus, but now this year we're having a big minus. So I think the Fed's got to act, but for whatever component in your 1/3, 1/3, and 1/2 attribution, whatever component is coming from the supply side, if you get supply shocks, there's nothing the Fed can do. So the Fed's going to raise interest rates to try to slow the economy in the one thing that it can control, which is demand for interest rate sensitive sectors. But what if that's not what's causing the inflation? Then they can slow that down, but that generates a stagflation environment. So I think this CPI number today is really going to sober the Fed up. You never want to conclude too much from just 1 month, but if we get several months like that where the core inflation is not coming down at all, and if anything is going up, the Fed they're gonna be trying to contact the tarot card readers, and we got to go get the ghost of Paul Volcker on this.